Hi, this is Bullseye Joe, and thank you for watching. This video is on home prices, and it is January 1, 2009. This chart we're looking at, I'm not sure how well it's going to come through in the video, so if you can't see it clearly and you'd like to take a better look at it, click on my link, Bullseye Joe on YouTube, and there's a link to this chart if you want to take a better look. Basically what it's showing is house prices adjusted for inflation. Anytime you're going to compare long-term prices, you need to factor in inflation, because obviously prices just naturally rise over time. So if you look at this chart, you could argue prices were sort of flat when adjusted for inflation, except for two periods. One period was as we entered World War I and through the Great Depression. Prices were lower during that time. That's here, if we can see the cursor. And then lately, this is from 1998 to 2006. And here, it's basically just off the charts how high prices went. Whoops. Let me fix that. Sorry. So, you see a boom here in the 1970s. And you see a boom here in the 1980s, but it doesn't compare to this boom at all. So anyway, since then, we know the house prices have been falling. Now, this is important because everyone says the economy can't improve until house prices improve. Now, by improve, I think they just mean stop going down. Well, we all hope that happens. I guess buyers probably don't really hope it, but for the economy's sake, and we hope it happens. The problem is we have rising unemployment. We have banks making everything tougher. They want bigger down payments. They make it harder to qualify. They want better, FICO scores. So, hoping that prices will stop going down is not a plan, and it doesn't accomplish anything. So, you just got to be aware that who knows what's going to happen. We have, it looks sort of bad. Foreclosures are still rising. 45% of national sales were called non-organic, which I think they mean foreclosures and short sales. So basically half of the sales are not normal, typical sales of someone just selling their house. Prices are dropping. A lot of people are underwater. We have people took loans out where they didn't even have to pay the interest on the house. So they took a loan for say $300,000, and now the price, now their loan is like $305,000 because their monthly payment doesn't even cover the interest. So there's a lot of things that suggest that there's still a problem with housing. I don't like saying that for many reasons, but it is the case. And if you're going to invest your own money, you have to be honest with the facts and the truth. Kramer says you don't invest on hope. Kramer has a lot of good advice. I know a lot of people don't like Kramer, but he's got a lot of good advice. He does. So basically, I'll just say a couple more things. The supply of homes in the U.S. is 10.2 months supply. Basically, they take the number of homes for sale, divide it by the monthly sales rate, and you get the monthly supply of housing. It's at 11.2 nationally. That is much too high. There's too much supply. Everything is about supply demand. Just everything. Pitchers in baseball get paid a ton of money because there's a small supply of very good pitchers. It's just everything is supply demand. And right now we have much more supply for housing, and we have decreasing demand, or it's just not a good equation. Now for Massachusetts, which is where I'm from, supply of housing is even higher. It's at 12.2 months supply. So it looks like there's going to be downward pressure on prices of housing because demand, buyers are decreasing and supply, foreclosures are increasing. So that's really this is the chart. I'll show you one more. This is the same data but shown differently. This shows you the price growth of housing, again adjusted for inflation. And so you see early 1900s, it was negative 1.2% annualized price growth. Then from 1930 to 1997, it was a 0.7% growth rate adjusted for inflation. So home prices rose, but less than 1% a year when adjusted for inflation. And now you come to this huge boom that we've had from 1998 to 2006, where prices rose at 8% annualized. House prices cannot grow at 8% a year forever. It can't. We were in a bubble. There became a frenzy for housing. That's what happened. So who knows what's going to happen in the near future, or even in the next few years. But if you want to keep up on the news, this would be the website I'd recommend. ml-implode.com. That stands for Mortgage Lender-implode.com. This is updated daily. Maybe it's updated hourly. Lots of news stories on home prices, on loans, on mortgages, on what's going on. And if you wanted local news as well, local being Massachusetts, New England, bostonbubble.com is a website that you might want to check out. So thank you for listening, and I'll make more videos soon.